Hello, we are back again. It is the start of the next tax season, and man, it seems like it goes so fast. And this year, we have so many different things happening, and I I don't even know where to begin with it. But we're just going to jump in. We're going to dive in, and we're going to figure this all out together. But lots of changes, lots of tax laws. AI is huge. It's even in taxes now. We're gonna talk about that a little bit. But let me start sharing my screen, so we can jump into this and get going. All right, here we go. All right, here we go. So lots of tax changes this year that we have to keep in mind for preparing. Thanks for taking the time to meet today and watch this video so that we can go over what's new and how that impacts you. But a lot of these are actually good. There's some good changes in there, some not as good as they are touted to be, but still good. So we're going to walk through those and talk about a roadmap so that we can make sure that we're keeping as much money as possible in your pocket. So, when you're like training for a marathon, I've never done that, but okay. So this is what I hear. You don't wait until the day before to start preparing, but you take some time leading up into it. And so that's kind of the same concept we're looking at here, is kind of digging into this a little bit early so we just don't jump into it when the season is starting. And so I'm sure by now we've all heard about the one big beautiful bill that was enacted in the summer, and there were a lot of major tax changes that came with that. And it's important that we kind of dig through that and look at what that means to you and for your taxes. So let's start with something that affects almost everyone, the standard deduction. So here's some good news. Uncle Sam is giving you a raise. Well, sort of. The standard deduction is the amount of your income that you don't pay taxes on. No receipts needed, no forms to fill out. It's just an automatic deduction. And for 2025, these amounts are going up. And we're looking at 31,500 for married filing jointly, and 15,750 if you're filing single, and 23,625 if you're head of household. So think about it this way: if you're married and you earn $70,000, then you're paying taxes on only 38,500 of your income. So that's a significant savings. So let's head on to the next slide. We are going to talk about, if you're over 65, you've got even better news. So this is for our experienced clients. And by experience, I mean those who earn the right to be called seniors. If you're 65 or over, you're going to get an extra $6,000 deduction. And that's huge, especially if you're taking in pensions or things like that from your retirement. It's going to really make a difference. If you're married, we just are going to need additional verification to make sure that you're over 65 so that both of you can get it. So everyone, if you're married, one person can get it if they're over 65, or both of you can get it as over 65. But we do have to just verify that, because we're going to talk about later. There's a lot of compliance changes every year, more compliance. So it's important that we make sure that you qualify. All right, so let's now talk about brand new deductions, and that's a lot of what we really need to get into today. All right. So if you work a job, you earn tips. So think of like a server, bartender, hairstylist, delivery person, valets. Then you're looking at a deduction of $25,000 potentially. I say potentially. I know it says no tax, but it's never the case. There's always some phase outs and requirements and things like that you have to meet in order to get the deduction. If you're filing single, that deduction would be 12,500. So there's a portion of those tips that you make that you're able to deduct. Now there's phase outs, and you're going to hear me talk about that phase outs basically mean that if you reach certain income levels, you're not going to be able to take the deduction completely, or you may not be able to take a portion of the deduction. So there's phase outs. We won't really get into the nitty gritty of that, but basically, if you're earning tips, you want to provide those logs and your W-2. The W-2 this year, they didn't change it for the tax rules. So what a lot of employers are doing is they're going to put it online on box 14, but not everyone's doing that. So it may be important for us to get that last pay stub or your pay logs or something like that so we can figure out where the tips are that you're earning. Okay. The next is the no tax on overtime. And again, it doesn't mean no tax on all of your overtime. There are limitations to it. It's similar to the one on tips where we're looking at $25,000 if you're married filing joint of overtime wages and $12,500 if you're single filer. So again, it's not completely all of it. It's the portion of your overtime that is considered the overtime. So for example, if you're paid $20 an hour, you're paid $30 for your overtime. It's only that $10 overtime surplus that you're getting that discount on. Also, it has to be true overtime. So it's a little tricky here in California because we are paid overtime if we work over 8 hours in a day, but that's not what this is talking about. It's talking about any hours that you work over 40 for the whole week. So it's a little bit convoluted, but basically, if you're working that overtime, we just need the clear documentation. Hopefully, they put it in box 14. If not, they might send you a summary or some sort of supplemental statement that shows the amount of overtime that's eligible for this. I just saw that FedEx is not an employer that has their wages based on the fair labor criteria. And so because of that, they don't qualify for this, which is kind of a bummer. For anyone that works for FedEx, they won't get any discount for or deduction for their overtime. So, there's a lot of little, like I want to call the fine print to some of these new changes. So it's important for you to make sure you just have all your documentation. And then if we have questions, we can walk through that with you at a later time. All right, here's another new one that might surprise you. There's a tax benefit for buying an American-made car. And so if you bought a car, yay, congratulations, but you might be able to write off on your taxes. So if it was assembled in the US and it was a new car purchase, not a lease, not a used car, not a foreign car, has to be assembled here, has to have been purchased last year, then you would qualify to deduct an additional $10,000 of the interest that you paid if you paid $10,000 in interest on that car. So it's kind of a reward for buying American. I think it's that the push that the government's making now for everyone to be more US focused. And so they're providing this additional deduction. So what we would need from you would be that bill of sale, the purchase document from your car dealer. Some car dealerships are actually providing a 10, I don't know if it's a 1098 or 1099 form to show that. If not, if you have that along with the vehicle identification number, so that's how we can prove that it was the final assembly was in the US, then you would qualify. And you could provide that, and you'll see a section for that in the intake. So let's talk about families, the child tax credit. So raising kids is pricey, and Uncle Sam is throwing in a few dimes because it's really not a lot of money, but a few dimes, in my opinion, to help out. So good news for parents and guardians. You get an increase in the child tax credit. Yay, 2,200. It was 2,000 last year, so we're getting extra 200. And I want to know who is writing this law because my kids definitely cost me more than $200 last year. In addition, between the matcha, the acai bowls, and Chipotle, I think that's just one weekend with these kids. But anyway, I digress. Let's get back to this. So we'll take what we can get. We won't be ungrateful. So it's nice to have that little extra $2,200. It's a true credit, which means that if you owe $2,200, your child credit will wipe that out completely. which is a little different from a deduction. So it's a nice thing. The only thing to keep in mind is it applies to children who were under 17. So I just lost another dependent because my son turned 17, but oh well. And again, who writes this? Because that boy of mine is just as dependent as ever at 17. So I don't know why all of a sudden for tax purposes he is not. It is wild. But anyhow, we take what we can get. All right. For those of you in the high tax states, like those of us here in California, they have raised the salt tax. Yay. Oh my goodness. When they took it away, it was such an awful thing for those of us in New York, California, New Jersey, and Illinois, where there's high property taxes. So you may remember they capped the sales and state taxes back in 2018. So now they've added a temporary increase. A lot of these are temporary. I do want to bring that out. That a lot of these are expiring in 2028. So we will see what happens then. But a temporary SALT increase. So if you have property taxes in those high tax states, then you're going to get a bigger benefit like you did back in the day from it, which is a great thing. I'm not against it. So again, you have to itemize in order to get this. And let's see. Yeah. So like before, for example, if you're paying $25,000 in property taxes, which is not uncommon, they would cap it at 10. You can only take 10,000. Now you'll be able to deduct the whole 25, which is really great. There are phase outs like we talked about. So if you're making over certain income levels, then you don't qualify for the full SALT deduction. You'll get that old cap again. But that's more detail than we want to go into today. Parents with young kids, this one's for you. So if you're paying for children to go to childcare, then there's this credit. We've had it in the past, but they've enhanced it a little bit more. So they're able to take the $1,500 for one child, $3,000 for another, if you have a second or more children to pay for their childcare cost. It's a non-refundable credit. So basically what that means, like we talked about the credit before for the child tax credit, where if you owe 2,000 and you 2,200, you could take the credit, it will wipe it out. Well, this one, you have to owe tax to get it. So if you have a refund and you have these childcare expenses, then you're not going to get credit for this credit. It's not going to give you anything on top of it, which is kind of a bummer because childcare expenses are a lot. But it is here. We just would need to have, if your childcare provider has a W-10, provide us with that W-10. If not, just the document that they give you that has the summary. Just want to make sure that their EIN, address, and phone number are on it so that you can qualify for this credit. Without the EIN, we can't do anything. Now let's shift gears and talk a little bit more about what we would need from you to make all of this happen. So here's where we need your help. All these deductions and credits we talked about, they're great, but we can only claim them if we know about them. And we only know about them if you tell us about them. And how do you tell us about them? It's in the intake form that we have you fill out each year. So, I know it's a pain, but it's the only way we're going to know what's going on. It's kind of like our compass in navigating through your financial situation each year. And without it being filled out correctly, we won't know how to exactly see what you qualify for. So complete it fully, tell us about your life changes, upload all the docs at one time if you can, and then you want to verify your direct deposit. Now we're going to talk about something a little bit serious, and that's compliance. Not a fun subject, but we do have to talk about it. The IRS has received a lot of funding to upgrade their technology, and they've done that dramatically. And I just went to a training this week, and we talked about how the IRS is using AI even more than ever. And what's happening with their AI is they're using it to find abnormalities in either your income or if you own a business and your deductions and how you're taking them compared to someone else with the same company type or the same NACIS code, the code that we put on it says kind of like what your business is. And they're using it to figure that out. What they're also doing with AI is they're sending out notices quicker. So before the IRS was on kind of an automatic notice delivery system. Now what they're doing with AI is it's pinpointing as soon as you e-file that there's an underreporting or something like that that's going on, and those notices are coming out lightning fast. And what that's doing is it's speeding up their time to collect. So before, we might be looking at a multiple month process before they get to that last letter with the intent to levy or intent to lien. Now we're seeing that being speeded up, and that's happening in half the time. So it's really important that we're being really careful about what we're putting on the return and trying to keep you out of trouble and out of an audit. So again, going back to what we talked about before, super important to fill out that intake, super important to do it carefully, because that's the only way we know what's going on. And you're going to see the intake this year. It's going to have more questions. It's going to ask for more things as you go through the portal. It's going to ask you to verify some things that you might have already verified on the intake, but it's just making sure we are for sure putting the right information on so you don't get one of those notices, because it's really difficult to get in touch with the IRS, and it's really difficult to get things reversed when things are going down a wrong path. So it's easier that we get it right from the start. And it's my job to make sure you're getting everything you need. You're making the right decisions. We're making the right decisions for you as far as the deduction go, and that we're as aggressive as possible, but in a legitimate way. So, not going to cross any ethical lines or anything like that, but just making sure we're protecting you with what's going on. All right, now let's talk about documentation. Your insurance policy. So documentation is the way that we can ensure that everything we're reporting is accurate. Let's go through what we're going to need. We're going to need all of your tax forms, your W-2s, your 1099s. If you have tips or overtime, we need logs and proofs of that. Car loan statement, childcare, healthcare, and then direct deposit information. You'll see in the intake, while we don't need receipts for every single thing that you've done, there are going to be questions that ask you if you have documentation to prove that the information you're providing to us to put in return, that you have a receipt for it. So just make sure that you have that documentation, you save it. If we do need it, we will ask for it. If you want to upload it anyway, totally fine. That way it's in a secure place in the portal. We're good with that as well. So this year we're going to be seeing a new form on our tax return. It is a Schedule 1A. So this Schedule 1A is for reporting all of these new deductions from the new tax bill. And you're going to see that when we file for you this year, it'll be attached as an additional form. So if you qualify for any of the ones that we've talked about, then just be aware that you'll see that in the form stack. So there were some important changes that we all need to know about. The IRS, as of September 30th, is no longer issuing checks and no longer accepting checks. So if you have a refund, you will need to provide direct deposit information. If you owe them, you will need to pay them online. And the best way to be able to do that online is to set up an online account through irs.gov. They'll ask you to verify some information from a prior tax return, and then you can pay them through with that account and see what's happening. The other thing you can do if you don't want to set up the account is you can go and just select to pay. There's a kind of tab at the top of irs.gov that says to pay your taxes. You can do that and just go in and pay them through their account, but they will not be accepting check payments this year. So direct deposit will be mandatory. All right, here are some deadlines to keep in mind. April 15th, everyone knows that one. That's our main tax deadline. Then we have the extension deadline of October 15th. Just remember that that's the extension of time to file your paperwork that it's not an extension of time to pay your tax. So if you are pretty sure you're going to owe tax, then when we file your extension, you will definitely want to go online and pay that tax. And if you need help figuring out an estimate of what that can be, we can help you with that as well. Otherwise, you can just pay the amount that you're able to pay. But just remember, a lot of people think it's an extension of time to pay. It is not. It's only an extension of time to file the paperwork. Along with that, we have document submittal deadlines as well, so that we have enough time to get everything done in a timely manner. For the April 15th deadline, it is March 21st. So please have all of your individual tax documents in by then. If you haven't received something, because I know things are going to be a little different this year with all of the changes, then that's fine. What's going to happen is we will file an extension and try to get it done as soon as we can. But anything that's received after that, don't expect that it's going to be done before the deadline, because it just may not. there's going to be a lot going on this year. I'm already anticipating the madness. If you're filing an extension, our document deadline is September 18th. So just keep those in mind. Reason we do that early, again, is so we have enough time to file. And especially with the October deadline, sometimes what we find that happens is that we're missing documents, or you might be missing from your provider for insurance, that 1095 form, and it takes them time to get it to you. So if you're not able to get that in time, then you're going to be past the deadline, run into penalties. And so we try to avoid that. We try to give enough time so that if there is something missing that you have to get from another place and they're mailing it, that you have time to get it to us, so we have time to prepare it for the 15th. Okay. All right. And I'm just going to shout out my daughter. She created this year's tax season teaser video this year. It was fun to do. It was really cold in Paris, but it was a lot of fun. And if you haven't had a chance to look at it, it is in the top of the organizer, and it is also on our social media. So if you don't follow us on social, do that. Strategic Taxes CA, and then our sister company, Strategic Taxes, Tax Problem Solvers, for IRS issues as well. All right. Oh, and then I had the intake form link in the center on there. I forgot to mention that. It's the bit.ly link. It's bit.ly/strategic.org26. All right. So this is kind of the process. We do the intake, upload your documents. Within the intake, anything you've missed, you can upload it into the portal. Please do not email sensitive documentation. The IRS is on our backs about that. We have to sign all these authorization or sign all these confirmations or renew our license that we are being very secure with your documentation. So if I'm being super annoying, if you send me documents through email, it is because I've said that I'm like being secure with your information. So please don't do that. Please help me out. Put it in the portal, put it in the intake. After we get everything, we will start the preparation process and review process. If there's anything we need, we will reach out to you and ask you for it. You then at that point will receive the return to approve along with the invoice to pay. Payment is due at the time that we provide the documentation. Also, when we start the preparation, we will take a deposit, because it's not just me. There is another preparer, and he likes to get paid. So we have to, kind of be mindful of his time as well. And I'm sure we all would agree, when we do work, we do want to be compensated for it. So we will take that deposit to make sure that he is taken care of. And as always, you can go through the portal, and actually, when you're in the portal, I'm sorry, I kind of said that wrong, but when you're in the portal, you will get notifications of where we are in the process. And so if we're in prep phase, or if we have the documents ready for your review and e-file. So just look out for those emails. And the order, it's going to be a little bit different, because there's just been so many changes and so many requirements. So you might notice that there's just some different processes with the portal this year. And it's just because everything's moving and fluid that makes it interesting, I guess. All right. So let's get to the red flags and some common mistakes that create audits. Um, there are a few things that can happen that will make the IRS decide that they might want to take a closer look. So if your income doesn't match with what they've received, if you have um, W-2s or amounts on those that are not matching what they received, then that's usually going to trigger for them to take a little bit of closer look. And like I mentioned, we have AI now. So it's not someone sitting there looking at your W-2 and looking at your return. They're running it through AI, and AI is pulling all of these things out and it's sending out notices. And inaccuracies mean penalties. So, I know there's a mention of unrealistic deductions, which is more of a business thing that we're going to see. But on a personal note, there's the earned income credit and the child tax credit, and some of those credits we talked about today. If you're not qualifying for those, and they have to send a notice to you, there's a penalty for submitting an inaccurate return where you're taking a credit that it's proving you don't qualify for. So it's really important to make sure that, again, that intake is really good. The I's are dotted, the T's are crossed, that you provide the EINs for your medical, your childcare providers, and you're reporting all your tips, because if they're receiving zero and then we're saying you receive different, again, notices and problems, and we just don't want that. So to help with the process, just be sure you have all of the information in front of you and ready to go. We're going to ask you a lot of questions in that intake. Did you move? Because there's implications to that. Did you change jobs? Which means you might have multiple W-2s. Did you get married or divorced? There's implications for that as well. Did you have a baby? There's this new savings account that's set up that has to be done within the tax return. So we're going to ask you, if you've had a new baby, if you want us to set that up, because that's the only way it can be done. So that's there as well. Did you buy a house, sell a house? So there's all these things that create tax situations. And so we're going to ask a lot of questions to make sure we're not leaving anything on the table for you. And then one other thing I want to bring up is about crypto. I had that training that I mentioned earlier, and crypto has a new form. There's a 1099 DA now for cryptocurrency transactions. If you mine, if you trade, if you have exchanges. And a lot of those forms are going to come without basis because they weren't tracking it back in the day. Or they may come, or you may have situations where the company you're using went out of business. And so we have to put that information in as well. So it's a lot of moving parts when it comes to crypto. So you'll see that section also has expanded, because we have to know whether or not you have your basis calculations for that. And if not, we have to recreate it. And I've had to recreate one last year and it took me days. So it is a painstaking process. And again, we can't do it wrong, because the IRS is just going to make it zero. Basically, what that means is they're going to say that you paid no money to buy this. And so when you sold it, everything that you earned when you sold it is profit, which is not true. So we have to recreate the files to accurately show that you did pay for your crypto transaction. And so you shouldn't have to pay tax on the whole thing. But if they don't like the recreation, they'll disallow it. So there's just, like, again, I know I feel like a broken record for saying this, a lot of moving parts this year. All right, so what do you need to do next? Gather your documents as soon as they come and keep them in a safe place. In our house, we have a little cubby that we put every tax document in, and we stack it up, and we leave it there. No one touches it until we get everything, and then we prepare. So figure out your system for gathering all of your docs and not losing them. Fill out the intake. We've talked about that a lot. Do it as thoroughly as possible so that we get all the information to benefit you. Get everything together, put it in the intake. If you want to make an appointment with us, you can do so. Otherwise, you're going to select your review option. It can be by Zoom. I can send you a video. You can review it on your own. And after that, just relax and let us handle the work from there. So thank you so much for listening to me ramble a little bit and share my life a little bit with you. This time of year is super stressful, but at the same time, I do enjoy the opportunity to find out what's going on in everyone else's life and to talk about a little bit of the changes that have happened in the Saucedo household as well. One of our kids moved out and the other one's turning 18. And there's just so many little things that happen in a year, and it's amazing how quickly time flies. So hopefully everyone is doing well. And again, my job here and our job is just to make sure that this whole process is painless as possible. You get every deduction and benefit that you're entitled to, and that we're able to answer your questions and provide the most accurate and complete tax return possible for you. So if you have questions, there's my email. There's also the other one, the Gmail as well, that some of you have. Working the website as well has some information on there that you can view, some new blog posts that we've added, and again the intake form. That's a little bit off. It's strategic org 26. A little bit of a typo there, but yes, so that's all that as well. And thank you so much. Appreciate you, appreciate your time, and look forward to having a wonderful tax season with you.